Oh, we're going to redo this stream. So the last one, apparently I didn't have my microphone on. So we're just going to redo that. Let's see, what did we decide? The first thing we wanted to highlight was we were looking at what happens when you sweep versus run liquidity based on intermediate term highs. So we said that although this looks like a sweep, paying attention to the candle, it might not look like one, although it might start looking like one rather. When it turns here, it reverses, and this would be a loss if you take this candle specifically. And then you see that after you sweep, stay above, and you're just, this is looking extremely bullish. Not to mention, you're thinking bullish anyway, considering that you have higher intermediate term lows. Very bullish sign. But that aside, this is the evening session for 5/18. Let's instead go back to our recap for the day. I figure we could start at 6, and then let's just do our recap and see what happens. Okay. So first we started by saying that we went up overnight. Did we see any trades? Okay. Optimal trade entry comes down to this first percentage fair value gap. Keeps coming down, turns around. I was complaining the whole time about how close we were to the opening range settlement from Friday, because I was saying that our gap was going to be so tiny again. But we'll get into that as we get closer to 9:30. 6:30. Rejection of this breakaway gap. This was a decent move here. Rejection. Finally rejected. 139. Decent move. Get a quick 50 points out of that. Sweep a previous day's low. Coming back up to get rejected again. Looking to resweep previous day's low. We're looking to resweep. There's a good chance that we're going to stay bearish. But instead, we resweep. And we do whatever this was. Honestly. Honestly, I would have been thinking bearish at this time because we created a lower high, lower low. But then when we create a higher low, start thinking what's going on here. I have no idea what this was about. This was like a 70-point candle. We did sweep previous week's 50%, which was extremely interesting. This was a great opportunity to get in here. But you'd have to watch this very closely because if we had this much energy to come up, who knows? I saw this. Yeah. Plus, I said we had previous days 50 above that. Who knows? This did concern me because, like I said, we were so close to opening range gap settlement from Friday, and then we got all this liquidity. I said this must be engineered. I called it out during the stream that I posted for pre-market. It was beautiful. I was complaining the whole time. Thank you for whoever's smiling on me, because I really wanted to see a large gap, and it came. It arrived. So came back down, almost as though you reject it and create some more liquidity. And dancing around that, come right back up, open up that gap again. And instead of sweeping like it looked like we were, because this looks like a sweep, we instead shoot up past London high, past previous long-term high, all the way up to previous day's 50, and beyond, all the way up to this bearish breakaway gap. Reject that. At this point, I'm thinking, okay, if it's respecting this bearish breakaway gap, we're for sure bearish. Not a bad entry area. But because I was already thinking bearish for the day, because we had a jagged bias down. We had an opening, we have a ladder down. Everything to me is telling me down. Plus the timing of this liquidity indicates to me we have this. It's so likely that we fall. This move is too much to be so close to 930. Have to fall, and we do. But I wasn't in. I was concerned that it might reject the box a little bit, come up here. I wanted to get a prime entry, even though I was thinking bearish the whole time. I didn't get in until about here because I wanted confirmation that we were going to be in. We were rejecting. We definitely, let me think of this a different way. The first bar had me concerned that we were rejecting the gap. Second bar should have indicate to me that we rejected the zero. And here, as early as possible, I should be in. If I had gotten in earlier, I wouldn't have worried here. Well, actually, I got in here. So I didn't worry too much because we didn't come back to this area. I think I got in around the 12.5%. With that in mind, I didn't see any drawdown, but I recall that I had seen about 730 bucks turn into about 520, and I panic closed. I shouldn't have panic closed because I was certain that we were going down, even though I was concerned that these bullish breakaway gaps might get respected. And if they got respected, I could have potentially seen some drawdown, and I could have walked away with less than 700 that I was looking for. So when I closed, I only got the 500 something, but everything was indicating to me that it was going down. We kept rejecting to the upside, and the bodies were getting lower. I think around here, I was thinking, oh, maybe, because we did reject the 50%, and the bodies were starting to get higher, but we rejected this inverse fair value gap instead, and then we printed down. What I really should have done was either move my stop to the 12.5%, because well, that could have taken me out, and I would have had less. It would have been the smarter thing to do, rather than stopping myself wherever I did stop myself for less profit. Because after I did this, I could have moved my stop to where I needed to be to preserve my consistency. That would have been the best way of playing this. Instead, well, the reality is if I were playing this regardless of consistency, I never needed to come out until much later in the day. So, we reject the bottom of the box, come back up. I'm starting to think bullish at this point. Then I remember, wait a minute, this is an optimal trade entry area. And we reject it. So, there's definitely a chance to get in here. Right here is a great opportunity. This would have been your first distribution. This is your second distribution. See if you can print outside of the box. You do. You come right back inside. You reject this first presented fair value gap. You print right through the session first presented fair value gap. And I'm concerned about the bullish nature of this. But I see that we create a short-term high that's significantly lower than the intermediate term high. So I see what happens, and we're also in an optimal trade entry area. I might have thought about getting in here. If I got in here, my stop realistically should have been here. Actually, I might have played myself if I gave myself a stop here. So the reality is my stop should be here because we never come back to touch that. The reality is if you get in here, I don't know how you'd know that, but maybe watching this and not FOMOing into a trade, maybe try to get in towards the top of the box, especially on the second distribution. Because the third distribution, if it's not lower, it could use a sweep opportunity. So, well, this is the third distribution. So, and then you never see drawdown if you get in here. And this just prints right past the box. It's absolutely beautiful. Today was a beautiful day for trading. Comes back up, tests this. I think it falls after that. So this intermediate term high sweeps the prior one with a long wick. It's very nice. And it comes even touches the first presented fair value gap from prior session. Well done. This is a trade that this right here is a trade you want to see. And then you come down, you take this all the way down here. Yes, I'd probably get stopped out somewhere around here because I'd trail this. Once you take this liquidity, you take this low right here, this long-term low, and you even have an opportunity to come back up, and you get an optimal trade entry. And honestly, I'm thinking higher intermediate term lows. Higher intermediate term low. Lower intermediate term high. Honestly, I'm watching at this point. I want to see, okay, create a lower intermediate term high. This would have been a sweep. Okay. And boom, look at that. Boom, you take this right here, rejection, wick through of the long-term high. Oh, this is beautiful. Wick through of the long-term high. So this one is nice. Could have taken this. Maybe you get in there. Boom. Look for the turnaround. Because this is such a short leg, look for the turnaround. Because this wicked through the long-term high and the first presented fair value gap of the prior session, melted. Wonderful. Creation of the breakaway gap. Beautiful. Absolutely beautiful. Look for exit somewhere around here at this liquidity, which is a bullish breakaway gap. And then see how you treat this one. Maybe if you're not already taken out, because this does create a balanced price range, see how it treats that. Yeah, this is bullish. But you come up here, I would see, maybe I'd be interested in getting in here for a quick, maybe see how it treats this inverse fair value gap. Might be interested in taking that. Oh yeah. At this point, you should have been done trading for the day so many different times. It's already afternoon session. I don't like how it's respecting this bullish this bullish breakaway gap. I would probably think that after this rejection, I might be out here. Don't think I'd feel comfortable getting in for this one because this leg is way too short. And we're clearly bullish. Or we're chopping, obviously, but this is too bullish for my taste. Although I'm thinking we have... This is not even bullish, honestly. This is compression, because we have an intermediate term low that's significantly higher than this low. This high is, yeah, I would need to see some sort of sweep of one of these intermediate or that one, the long term, to get an interest in anything. And there we have it. We get the sweep of this intermediate term high, and boom. It gives you some points. 11. It gets you 70 points right there. Take that to, you could even take it down to this order block, this bullish order block. You can take it past it if you know what you're doing. Jeez. And then you come all the way down here, looking for that 10 a.m. low, looking for that print through. It sweeps instead, rejects this area, prints past 3 o'clock. I don't want to trade at this point. I don't know where this came from. I have no idea. Expect to be out of any trades by this point, really. Last hour, I have to figure out how to trade that. Create a big balanced price range that gets reversed or inverted or nullified. You don't really want to be in any trades by 3:30. You did reject the first presented fair value gap of the PM session. Decent trade if you're into that, but definitely don't want to. Definitely don't want to. Take it right back. And then 350. MLC. I don't want to trade any of this because some firms will auto liquidate you if you're not closed by 4 p.m. and then who knows what happens after that. Don't want to see any of this. All of this is dead time. And that's your Monday, May 18th.